Hello, everyone. Welcome to our live webcast with Professor Mauro Guillen on preparing for the business impact of COVID-19. It's our true pleasure here at Wharton Executive Education to invite over 1,000 of you to participate in this event live. We have people from all 6 continents, and many of you are past participants, clients who continue to work with us, and a few of you are people who signed up for courses over the last month or two who were not able to come to campus. So we look forward to seeing your questions and have an engaging conversation with Professor Mauro Guillen. I would like to say that Mauro is the perfect professor to kick off this series of webinars that we'll be announcing, because Professor Guillen really took leadership during this moment of crisis and is the academic director for the largest course that Wharton has ever taught for undergraduates and MBAs. It is the epidemics, natural disasters, and the geopolitics, measuring the global business and financial uncertainties during COVID-19. And what is amazing about this course is that over 2,000 students are actively participating in this course. And Mauro is here to share his insights, his knowledge, and we thank you for staying connected and realize that in this moment, we're all connected across the globe. So with that, I pass it over to Professor Guillen. Thank you.
Thank you so much, Michael, for inviting me. Thank you all for joining. I hope that you are in good health right now. And we have a little bit less than 60 minutes to go over what are the implications of this crisis for businesses around the world. And more importantly, how should businesses prepare for not just the crisis, but also the recovery. And that is going to be my punchline. You will see towards the end, which is that, yes, we need to steady the ship right now. All businesses need to arrange or rearrange their operations in such a way that they can survive this crisis. So steadying the ship is really important. But we also need to steer the ship in the right direction so that when the recovery arrives, the company, the organization is ready to grow again. So I am going to show you a few PowerPoints at the beginning, and then I will take a first round of questions from the audience. We have a curator who is going to be feeding me the questions, so please use the chat feature to submit your questions. And then I will continue with the presentation, and I will take again questions towards the end of our time together today. So once again, welcome, and here we go. This is the first slide that I have. I'd like to tell you a little bit about my background and why I think I have some expertise, not all of the expertise, but some expertise that might be relevant for understanding what's going on and taking action. So the first is a book that I published back in 1990 about the AIDS pandemic, which is the last pandemic that we've had in the world before COVID-19. In 2016, I published a book called The Architecture of Collapse, in which I argued that the increasing interconnections in the world were delivering higher standards of living, but they were also exposing us to very high risks in terms of the potential global diffusion of disruptions and crisis. And then I have another book forthcoming in the next few months in which I try to explain the trends that are going on in the world. And I would like to argue today that most of those trends actually will be accelerated by the current crisis. Here's the enemy. This is the virus, the coronavirus, COVID-19. And this is why it has become, from a biological point of view, so deadly, which is that it is very efficient at replicating itself inside of the human body. Now, throughout my presentation, I would like to emphasize the concept of preparedness. You see, organizations, companies, and society at large, we always prepare for certain kinds of catastrophic events, like earthquakes and hurricanes. We actually teach children in school what is it that they should do in the event of an earthquake or a hurricane. We also change the building codes in those parts of the country or the world where earthquakes are most likely to be lethal. So we make a lot of adaptations. And the question that I ask myself is, why as a society and as companies aren't we prepared for epidemics and pandemics? Perhaps because we perceive them as being relatively rare events that are unlikely to affect us. Well, let me show you a map that was published by the World Health Organization about a year ago. It shows data on epidemics. Now, remember, epidemics are different than pandemics. Epidemics are localized outbreaks of disease that affect a few people in just one part of the world, most of the time one country or even one locality. Well, according to the WHO, between 2011 and 2017, there were 1,307 epidemic events in the world. Now, only one has become a pandemic. A pandemic, unlike an epidemic, is an outbreak of disease that affects a large number of people over many, many different kinds of areas. And a global pandemic, of course, is one that affects virtually every corner of the world. So over the last few years, we've only seen one of these epidemics become a pandemic, and that's COVID-19. Here you have a chart as to historically how frequently global pandemics occur. So prior to this one, I just mentioned that the HIV/AIDS pandemic, which started in the 1980s, was the most recent example of a global pandemic. Prior to that, it was the 1918 influenza pandemic, which, if you remember, killed tens of millions of people, primarily in Europe, but also in Asia and North America. And prior to that, there was the third plague in the 1860s, 1870s. So the frequency of these global pandemics is about 40 to 60 years, which is about the same frequency as major earthquakes. So Southern California, for example, or Northern California, get a big earthquake every 40, 50, or 60 years. Now, we prepare for those earthquakes, although they are relatively rare events, those massive earthquakes. But we are not prepared, I think it's fair to say, for a global pandemic. So what has been the economic impact? Let me focus your attention on this. And of course, also what has been the impact on businesses. First of all, I think the clearest manifestation of the impact of this pandemic is in the stock market. Here you have a chart published by the Conference Board, which is an American business, large association of large businesses. And you see that COVID-19 during its first few weeks was much more damaging to the stock market than the aftermath of the Lehman collapse 12 years ago. Now, as you know, over the last week or so, the stock market has come back a little bit, but it's still unclear whether it will continue to rally. Part of the you should focus your attention not only on stock prices, but also on the volatility. And as you know, over the last couple of weeks, we've seen the stock market go up by 5% one day, and then go down by 5% the following day. So let's take a look at this chart, which shows the volatility in the S&P 500 during episodes of economic, financial, or geopolitical crisis. So you have the information for the Great Crash in 1929, for the Great Depression in 1933, for Black Monday in 1987, for the most recent global financial crisis at the end of 2008, and then until 2 weeks ago for the coronavirus pandemic. And as you can see, the level of volatility that we're observing in the markets nowadays is the third highest on the chart. So it's a considerable level of volatility. Another thing for you to watch is stock buybacks. Why do I say this? Well, because over the last year or year and a half, companies around the world, but especially here in the United States, have been spending a lot of money on stock buybacks, and that has made their stock prices go through the roof. Now, let's take a look at this chart. We still don't know to what extent stock buybacks are going to drop during this crisis. But if you go back to 2008, you will notice that stock buybacks collapsed, right, during the latest recession that we've had here in the United States. And of course, this was a very important factor keeping stock prices depressed for a while. Now, how about the real economy? So there are many forecasts out there. I'm sure you've seen many of them about what may happen to GDP. I like this one from the Conference Board. It was published 2 weeks ago. It was relatively optimistic, noting that we will only see a recession here in the United States during the second quarter, but not in the third quarter. And I will update you about that in a moment. But what I like about this chart is that it decomposes GDP into consumer spending, inventory change, government spending, investment, and net exports. And this is for the United States. As you can see, in the second quarter, the forecast is that only one component of GDP, that's government spending, will show a positive growth, whereas all others, especially consumer spending, will experience a sharp decline. Now, how about the price of oil? That's another thing that we worry about these days. Well, West Texas Intermediate is trading today as we speak at around $26. So this chart, again, is like 2 weeks old. And as you can see, the impact on the oil market and oil prices of this pandemic has been much greater than the SARS outbreak or the 9/11 attacks and all of the other big events that you have on the chart. Now, there are two reasons for this. One, of course, is that this crisis is unprecedented in many ways because it is originally a biological crisis, but then it has mutated into an economic and financial crisis, of course. But the second thing is, as we speak, there's still a war going on between two of the largest oil producers in the world, Russia and Saudi Arabia. And that is also bringing the price of oil down. The recovery. So those forecasts. This is from the conference board. There's a big debate as to whether the recovery will have a V shape, which is the blue line that you see over there with a month of May reboot, or it could be a summertime V shape, or it could be more like a U shape, the gray line on the chart, if the recovery actually happens during the fall of this year. But nobody knows. But I can tell you the following: whether we end up on the blue or the orange or the gray line on the chart depends on two things. The first is to what extent the containment measures in the form of social distancing and sheltering in place are effective. And second, if we find a way to gradually reopen the economy. I will return to this last point about gradually reopening the economy towards the end of my presentation today. Now, other GDP forecasts. These were published by The Economist magazine over the weekend. I think the story is very simple. Europe will be, by far, the most affected part of the world in terms of GDP declines. You have there the range of estimates, but the average, the median of forecasts by economists, it's a decline of about 5% in the euro area economy as a result of this crisis. Why Europe? Well, because the pandemic is actually affecting more people over there, but also because in Europe we have some pre-existing issues. Unemployment was still high in Southern Europe. The European Union itself is not acting as one. Each country is going its own way. And in addition to that, as you very well know, European economies were not performing as well overall as other parts of the world. But still, for the United States, as you can see here, the median forecast is about a decline in GDP annualized of about 3%. So that is a major blow to the economy. I think it's very important to keep track of consumer confidence. And you have here the Conference Board Index and the Consumer Confidence Survey. And as you can see, the impact of COVID-19 has not been as large yet as that of the Lehman Brothers and subsequent recession back in 2008, 2009, and 2010. I think the reason for that, and I will come back to that in a moment, is that now we have other ways for consumers to buy things, and of course the government has acted more quickly. So in other words, both government action and technology, I think, is helping us weather this recession much better as consumers. Job losses, this is of course something that we need to avoid, and I'm happy to answer any questions about what might be the best way of avoiding them. I'm not going to bore you with the industries that are going to be suffering the most. You all know who they are. They're the ones that have been forced to shut down. That includes cruise lines, tourism, airlines, not only those, also restaurants, all sorts of commercial enterprises, and so on and so forth. Now, why is this crisis so bad? Why have all of these indicators, stock prices, GDP, and employment, gone south so quickly? Well, let me mention the following background factors here. First is that we have more people in the world now, and we have more of them, this is the critical thing, living in cities. Why does that matter? Well, because population density enables the virus to spread more quickly. This is why Madrid in Spain, or Milan in Italy, or New York here in the United States are some of the most difficult hotspots in this pandemic. Population density is very high. At the same time, we've seen an increase in mobility and travel, in part fueled by the growth of the middle class around the world. Then we have the issue of global value chains, and I will expand on that in a moment. Companies over the last 30 years have essentially been sourcing from the lowest cost locations in the world and holding very little inventory. They've been using just-in-time production methods. And as a result of that, of course, we've become very vulnerable to disruptions anywhere in the world to those global supply chains. I think other factors are also important here. Fake news, hubris and denial on the part of policymakers, anti-science attitudes. All of these things have essentially prevented us from implementing social distancing and sheltering in place policies more effectively and more quickly. And then lastly, let's not forget, this is a crisis, an economic crisis that began with both a supply and a demand shock simultaneously. And those types of crises are more difficult to deal with than crises that originate from just a supply side or a demand side shock. So let me expand a little bit on each of these background factors, and in about 3 or 4 minutes, I will start taking your questions. So please make sure that you use the chat button on your application to submit your questions or your comments. The growth of cities. Here you have a map that if you've taken a class from me at Wharton Education, you've seen before, I promise. 2014, the largest cities in the world. Look at the red circles, cities with 10 million or more. And by 2030, look at the projection of how big cities are going to be. So we are at a moment in which cities are growing very, very quickly by 1.5 million per week. They only occupy 1% of the land, but they are home to about 55% of the population. And what that means is that density in cities is extremely high, and therefore the virus finds fertile ground for spreading. Trade. So the global economy has become more interconnected. Air travel, as a result of the growth of the global middle class and the arrival or the entry of low-cost carriers, we've seen exponential growth in air travel around the world. As you can see on this chart here, showing connections between pairs of cities around the world, if somebody carrying the virus travels from one corner of the world to the other, then we see the spread of it. Growth in air travel, measured here by revenue passenger kilometers, as you can see when we compare the end of 2019, just before this pandemic, to the year 2016, which is only 3 years ago, we have 30% more people traveling over distances in the world by air. Global value chains. So you've all heard in the press reports that Apple had to stop production. Well, Apple assembles its phones in China, but that's not the entire story about the value chain. They use components made in many different other countries. And here you have featured Japan, South Korea, and Germany as the 3 most important sources of components for the iPhone. All of those components need to make their way to China, not just from those 3 countries, but from as many as 20 others. And then all of them are put together, and the iPhone then is shipped from China to markets all over the world. Well, this type of a value chain has become vulnerable. And a few weeks ago, Apple announced that it was having problems with it, with keeping up with the production of iPhones. Another example is the airline industry. The aircraft manufacturing industry. So this is Airbus, different parts of the plane made in different parts of the world, not just in Europe. And the same goes for Boeing, where we see that parts and components from 4 different continents come together in final assembly. Even if you take a look at a product as simple as Nutella, which is my favorite chocolate spread, you will notice that the ingredients come from 10, 15, 20 different countries around the world. So all of these value chains have been disrupted. We also have the pharmaceutical industry. Here you have a sense of the network around the world of this industry and within Europe. The value chain for the pharmaceutical industry has also been disrupted by this crisis, and it happens to be an industry that is going to be really important, as you know, for the recovery, because it is pursuing new treatments and, of course, the ultimate trophy, which is a vaccine to help us overcome this public health crisis. So in other words, the idea that I want to convey to you is that Our global economy has become so integrated, so tightly coupled, that it is exposed to many risks. So in the past, we've seen one big risk materializing. In 2011, the earthquake and tsunami in Japan. It actually brought to a standstill factories around the world because they couldn't get the parts and the components that Japanese facilities normally deliver to them. So we've seen this in the past in this one particular instance. And of course, this time around is happening in an even more widespread way. So we are in an economy with the capacity to work as a unit in real time on a planetary scale. That's a global economy. But it is one that is subject to many risks and potential disruptions. Before I take your questions, let me show you just 3 or 4 maps as to how these things diffuse in the world, such as a pandemic. Here you have an example that has nothing to do with epidemics or pandemics. It's about cats. So I'm sure there are many cat lovers on this webinar right now. It's about breeds of cats and how they diffuse around the world. This map comes from a study that was published some years ago, and it refers to several centuries ago, how different breeds of cats diffuse throughout Western Europe. And as you can see, the spread was essentially dictated by patterns of trade. In other words, the cats would jump on a ship, and then the ship would go to different ports along the Mediterranean or the Atlantic coast. And they would get off the ship, and then that breed of cat would become very prevalent in that location. Well, with viruses, it's the same thing. Here we have the example of the bubonic plague, the Black Death from the 1300s. It originated in Asia. It made it all the way to Europe on a merchant ship. The first port of call was Genoa in Italy in 1347. All of the sailors, or most of the sailors on the ship, were carrying the plague. This is the so-called Spanish flu of 1918. We should call it the 1918 influenza. And the reason for that, I'm sure you remember that I'm from Spain, is that Spain was not the origin of this pandemic. It was France. But at the time, World War I was being fought, and Spain was a neutral country. So it was one of the very few countries in Europe where the newspapers were not censored. And so they started to report about people getting sick. In the rest of Europe, especially in France, where the problem originated, newspapers could not report on these things because they were censored. HIV/AIDS, I mentioned earlier, was the last big global pandemic before this one. It started in the 1980s, but let's not forget, this is a pandemic that is still going on. Some parts of the world, especially Southern Africa, are still quite strongly affected by it. Lastly, and then I'll take their questions in a couple of minutes. Lastly, why is it this time around that it's harder to persuade people that they need to follow instructions from the health authorities so that we can contain the virus? Well, one phenomenon is fake news. Here you have several headlines from newspapers showing that on social media there are a lot of conspiracy theories circulating, a lot of fake news, not only about the pandemic itself, but also about potential cures. This is highly negative. And this undermines our efforts to contain the pandemic. As you know, there are many governments in the world that engage in fake news, but it's also individuals, and you have some information over there. The other factor is denial. So in the early stages of this pandemic, we were detecting, as you can see on this chart, that young people in the United States were denying the importance of this pandemic. And so they were not taking care of themselves and following instructions from the health authorities. Lastly, not that long ago, in 2018, there was a historian, Frank Snowden, who was arguing in a book, Epidemics and Society, look, SARS and Ebola were just dress rehearsals for what's to come. We managed to contain those epidemics. They didn't really become global pandemics. But now we're in the midst of one. And we need to learn as companies and as societies how to cope with these situations. So let me stop there before we rotate into what is it that companies should do to be prepared, not just to weather the crisis, but also to take advantage of the recovery. So I'm going to invite Ed, Jerry, to feed me questions from the audience at this point.
Yes, we have a lot of questions coming in about access to the presentation. So first off, just a reminder, we will make sure everyone has access to this presentation after the webinar is over. So to answer that question, Mauro, Can you comment on what actions can be taken in trade regulations to support the recovery?
Well, this is a great question. And as you know, the crisis has hit us at the worst possible moment in terms of trade. Why do I say that? Well, because for the last 2 years, we've been in a situation of trade wars around the world. They were triggered by the US administration, but I think the overall background is one in which there have been for a while in the world growing trade tensions. The reason for that is because we have very big imbalances in trade. Some countries have a huge surpluses, other countries have big deficits. So what is it that we should do right now? I have written op-eds in newspapers arguing that the time for trade wars should come to an end, meaning that whatever trade wars are going on right now in the world should be discontinued, that we need free trade, especially now, because we need every possible channel, not just to secure all of the equipment that we need for hospitals, but also because we need the global economy to recover from this. And the global economy will not recover if everybody becomes protectionist. This is the biggest lesson that I think we learned from the 1930s. What made the Great Depression so bad was not the stock market crash. It was primarily that countries, when they saw that things were turning negative, they decided to protect the domestic market. And that trade protectionism during the 1930s compounded the negative effects of the Great Depression, making it much more severe than it would have otherwise been. So I think it's very important that in the next few weeks, all of those negotiations, all of those conversations between governments in the world about free trade continue. It's very important that the US and China put an end to this crazy trade war between them, because remember, these are the two largest economies in the world. These are the two largest trading nations in the world. If the US and China cannot come to an agreement about trade, the recovery from this crisis is going to be much slower. Ed?
Mauro, how do you see this impacting Latin American countries where the virus has not been as impactful?
Well, unfortunately, it's probably just a matter of time before the pandemic reaches Latin America. There are reports about Ecuador, a country that is among the least developed in the region. I think that it is very, very important for the governments in Latin America to take preemptive action in the form of containment measures, including social distancing and sheltering in place. Notice that even India, well before they started to report a surge in cases, decreed a national quarantine for everybody. So I think that's really, really important. The other thing to watch in Latin America, of course, is the classic issue, which is short-term capital movements. I think it's really important for investors not to pull their money out of Latin America, all of that portfolio money. Because you know what happens? What happens historically is that when investors start getting nervous in emerging markets, especially in Latin America, they pull their money out, and then those economies essentially are pushed over the cliff. Right now, the situation in Latin America is not as bad as in Europe, of course, but I would say that of the next 2 or 3 weeks are critical.
Mauro, regarding consumer confidence, do you feel that modern technology and accelerated pursuit of the vaccine or similar treatment is part of that consumer confidence right now that we're seeing?
Yes, I believe so. There are 2 pillars, I think, to consumer confidence. One is that people don't lose their jobs. So this is why I am 100% in favor of government interventions that help secure employment. In other words, that give loans or guarantees, loan guarantees to companies, especially small and medium-sized companies, so that they can keep on employing their workers even if they're shut down, right? And alternatively, if those job losses are inevitable, then that we expand unemployment benefits so that there's enough aggregate demand, purchasing power in the economy. That's the first pillar. The second pillar, I think that fortunately we have this time around, this technology. So we have e-commerce. We have all of those companies that are engaged in all of the logistics involved in e-commerce. And increasingly, all sorts of companies, of course, are trying to continue selling their products to consumers through online channels. So I think those are the two critical pillars. We need them to work. And regarding the second one, by the way, there's a couple of threats to them. One is that companies such as Amazon, for example, apparently cannot keep up with demand right now, so they need to hire more workers. The other one is that we need to make sure that those workers along the logistics chain are safe. They're meaning that they have the protective equipment and that they can go to work knowing that they're not going to get the virus. Ed?
So Mauro, what steps should a company take to assess their ability to thrive when we actually do recover and start opening back up again? What steps should they take?
So I'm going to cover that in a couple of minutes in the second part of my presentation. So let me be more specific about all of those details. But as I mentioned at the beginning, I think it's a two-pronged approach. Steady the ship and steer the ship in the right direction to catch the wind of the recovery. Ed?
So we see what we're seeing are these ill effects of globalization. Is it required for each country to limit the industry-specific trades to maintain supply chain in such situations in this, what we're seeing?
Yes, I think there's a big debate about whether our supply chains, especially for essential goods, such as medical equipment, for instance, have become too global. And therefore, countries, especially in Europe and the United States, have become too dependent on those global chains. And now we see that in the event of a crisis, they get disrupted. So the debate is, I think, a very important one to have. I think it would probably result long-term in a situation in which, in the United States or in Europe, we end up manufacturing more of those essential goods. I think we should also stock more of them, of course. But I think it's a dangerous path. Why? Because you don't want to go back in time and start making things in the US or in Europe that can be more efficiently made somewhere else in the world, because the long-term effect of that will be to reduce the standards of living of the population in the world as a whole. So we need to be very careful about that. But I personally would be in favor of having a national plan for manufacturing and for stockpiling essential goods and equipment that we may need in the future if another crisis like this one reoccurs. Ed?
So if we do see a recession in Q2 of 2020, what data would point to a positive GDP again so quickly in Q3? What are you looking for in Q3?
Well, we need to focus on the leading indicators and more broadly on indicators that give us a sense as to what's going on among firms, I would say. So one of the indicators that I would watch is the Purchasing Managers Index. And because that's a measure, a really good measure of manufacturing activity. And the other one, of course, is sales to consumers, to the end consumer. Really, really important indicators. But I think in order for those indicators to start going up, what we need is to reopen the economy, however gradually. And that's also something that I'm going to cover in the second half of this presentation in just a few minutes. Let's take one more question, Ed.
So which countries would be able to bounce back faster from the impact in your mind?
Well, I think probably China and the United States. Why do I say that? And I say that for different reasons. I say that because China, two reasons. It is ahead of the curve in the sense that the pandemic started earlier over there. Number two is because they have a very, very useful instrument in these cases, which is the ability of the government to intervene in the economy very, very swiftly. Now, why do I say the United States also? Well, because we have the most flexible economy in the world. So our economy is different than China's. Our economy is driven by decisions that managers, workers, and consumers make in the marketplace. But it's very flexible. We don't have all of those regulations that are the norm in other parts of the world, like in Europe or also in Latin America. So those are the reasons why I believe that the Chinese economy and the US economy will be the first to recover. But I say that only under the assumption that we will continue with the containment policies regarding the virus, meaning social distancing and sheltering in place. And I'm going to expand on that in a moment. So if you allow me to advance in the presentation then to get to some of these questions, what is it that companies and in general organizations should do right now? Well, first of all, think about what military leaders tell us when they go to war. When they go to war, they say, well, we spend years and years coming up with a plan for the war. And once the war starts, then all of the plans become worthless. But you see, what they also say is that while the plans may be worthless when you are at war, planning is everything. Planning is essential. Second point, the CEO of the company has to become the explainer in chief. Third, every company has to establish a war room. This is what Winston Churchill had during World War II. Or an executive committee, ExComm. This is what President Kennedy set up during the Cuban Missile Crisis in the early 1960s. Now, there's several things that you need to consider about establishing this war room. First is, who is part of the war room? Well, not necessarily the top executives of the organization. You need to pick and choose. Who are the most critical for this? Maybe the chief security officer should be part of the war room, whereas normally wouldn't attend top management meetings. Then the war room has to make decisions as to which information to collect, how to process the information, how to make decisions, and then really importantly, how to communicate those decisions to employees, to customers, and also to the general public. And I will expand on that in a moment. Lastly, you need to have protocols in place. Who is going to work on site? Who's going to do telework? How about virtual teams? And above everything else, how are you going to enhance the well-being, motivation, productivity of your employees? So regarding communication, let me just expand on that. I think you have to prioritize employee well-being over business goals. If you don't do that, your employees are going to feel alienated, and it's going to be very hard for you to deal with the crisis and later to grow once the economy recovers. Now, second question, how much transparency? Do you tell your employees and your customers everything that is going on, including the financial reality about your company? Well, I think you should go as far as you can without compromising your competitive position in the market and without breaking any laws. And I say this in particular for publicly listed companies. So you have to strike also in your communications a balance between denial and panic. You have to provide your employees, but also your customers, with actionable items. Don't just inform them as to what's going on. Also tell them, this is what you need to do, or what I would like you to do. Preach by example. So if you want your employees to wear masks, then you always wear a mask as well. And then lastly, manage emotional contagion. We have a professor at Wharton, maybe you have taken a class or a session in executive education from her, Sigal Parsaid, who argues that it's very important to manage emotional contagion under all circumstances, but especially during a crisis, because you don't want your employees to feel panicky or your customers. At the other extreme, you don't want them to deny the severity of the situation. So you have to manage the emotional contagion because we all influence each other with our moods and our attitudes. Now, how about the supply chain? So I want to make a couple of very important points here. First is, of course, it goes without saying, you need to work hard to repair the supply chain if it has been broken or is under strain because of the crisis. But more importantly, create redundancies and buffers. You need to move a little bit away from just-in-time delivery, from just-in-time sourcing. Why do I say that? Well, because I think these types of crises will recur in the future. So now you have a chance of rebuilding your supply chain with this volatility or this uncertainty in mind. So don't replicate your global supply chain as it existed before this crisis. Try to create a new one now that is resilient enough to resist these kinds of crises. In other words, what you need to do is to strike a new balance, a different balance between efficiency and reliability. If you move away from just-in-time, if you increase your inventories, then of course that comes at a cost. You're increasing the reliability, but efficiency is going to suffer. Maybe it's a price that I think is worth to pay, given that these kinds of crises are likely to recur in the future. Now, another really important point that I want to convey to you, even if right now you have no customers because you have been forced to shut down, you need to continue engaging your customers. Why do I say that? Well, because once the economy recovers, you will want to resume operations and resume sales to your customers. But if you don't engage them now during the crisis, those customers may be gone by then. They may be purchasing things from a competitor. And very importantly as well, you need to plan for pent-up demand. Pent-up demand is the demand that resurfaces after the crisis is over because consumers have essentially postponed making those purchases. Companies that experience pent-up demand after crisis report that their demand after a crisis can be twice or 3 times as big as during normal periods. So you need to plan for that as well. You need to plan for the recovery, especially if you have pent-up demand. So in other words, how do you prepare for a recovery? Well, think that the crisis shall pass. Think that you need to be ready for the recovery, but you need to start making preparations during the crisis. It's of course very important to anticipate for your particular product or service, whether the recovery will be V-shaped or U-shaped or L-shaped or a hockey stick and so on and so forth. And you should do that analysis for each of your products or services. And also, I should say, you should also plan for the possibility of a double dip. Hopefully, we will be able to avoid that in the United States, as we did in 2008 to 2010. But remember, in Europe, they could not avoid that, especially in Southern Europe. They went through a double dip. So with one event taking place right after Lehman Brothers, and then the second dip taking place 3 or 4 years later. So once again, what are the necessary actions? You need to create a war room or XCOM. You need to establish protocols. You need to communicate truthfully, calmly, and with resolve. You need to repair the supply chain, but preparing it for a different era down the road. You need to continue engaging customers, and you need to prepare for the recovery. Now, let me finally, before I take your questions again, just spend 2 minutes on how is that recovery going to happen and how exactly is it going to happen? Well, the background debate here is, should we continue to be focused on saving lives, or should we be saving the economy as well? And of course, for saving the economy, we will need to restart the economy. Well, I don't think there's a trade-off between those two things. And the reason is that if we don't save the economy and we have persistently high unemployment, then what you can see on this chart is that people will die from high unemployment, but for other reasons. Experience tells us, history tells us, that when unemployment is high, deaths from alcohol abuse, diabetes, homicides, suicides, ulcers, and tuberculosis increase. And this data that you see over here is for European Union countries between 1970 and 2007 in terms of what happened after episodes of crisis, after recessions. There are only a few categories of death causes that go down when there is unemployment, and you can also see them on the chart. But on the whole, it is important to restart the economy because we may find that more people end up dying from unemployment-related illnesses than from virus-induced illnesses. So how do we restart the economy? Well, I think it's really, really important to focus our attention right now in the next 2 or 3 weeks here in the United States, for example, on tracking, tracing, and stopping the spread of the virus. After that, maybe in 4 weeks from now, we may be able to start certifying some communities within the US as being virus-free. Once we can do that, then we can start segmenting the implementation of containment measures, including social distancing and sheltering in place. In other words, we can open up certain parts of the country, certain communities, to what may feel as a return to some kind of normal life, with also workers being able to go back to work in the office or at the factory. That way we can slowly reopen the economy and social interaction. And of course, in this time frame, 5, 6, 7, 8 weeks here in the United States from today, then that would also allow for enough time for the stimulus measures that the Congress has just passed to work. In other countries around the world, I realize that you're right now in many different parts of the world well, readjust the clock. But I think it is possible to start reopening the economy selectively and gradually within 5 or 6 weeks if the containment measures work. So let me stop there and go through our second and last round of questions. Ed.
Mauro, regarding the stimulus plan, what do you think will be the long-term effects on the economy with the stimulus plan?
Well, the stimulus plan is supposed to have mostly short-term impact in terms of reducing the number of people who lose their jobs, making sure that people have money in their pockets, making sure that especially small and medium-sized enterprises, but also larger firms, don't collapse. That is the first-order intended effect of all of these economic packages that not just the U.S. government, but also other governments around the world have been passing. But your question, I think, is more about the long-term effects. Well, the long-term effect will be that hopefully we will overcome this recession that is going to be declared very soon, and it won't degenerate into a depression. Remember the difference between the two. A recession is 2 quarters, consecutive quarters of GDP decline. That's 6 months. A depression is declared when you have 12 consecutive months of declines in GDP. So we want to avoid a depression. Even longer term, of course, governments around the world are going to have more debt. But you see, we will never get to that long term with more debt if we don't act now, because the global economy could completely collapse. So there's a trade-off there. We need to do enough so that the economy doesn't collapse now, and we can stage a recovery without falling into a depression. But at the same time, we cannot overburden future generations with too much debt. So once again, it's a trade-off there. It's a fine balance that we need to find. Ed?
Mauro, as far as consumer behavior goes, when the economy does open, do you think the trends we'll see will be short-term, or do you think there'll be any long-term effects of that, as far as digitalization goes, consolidation, things like that?
I think there are going to be other long-term changes if we look at industry or we look at companies. So let me begin with employees. I think both companies and workers and employees will realize after this crisis that working from home is actually not such a bad idea. We're getting used now to technologies that enable us to, for example, have this class at a distance. And telework, I think, is going to become more prevalent. That's going to be good. Because remember, there are a lot of work-family issues. Maybe people staying at home will help them overcome those issues. Also, we have the problem with traffic congestion and with carbon emissions. So it may be a good long-term implication or consequence of this crisis. Now, when it comes to customers, I would say the following. First is that, yes, more customers are going to learn how to use effectively digital channels for purchasing goods and services. I think there's going to be a revolution in mobile payments. I think there might be an opening here even for cryptocurrencies. And I think just in general, the economy is going to move faster into digital, anything and everything digital. Because once again, we're learning now in the midst of a crisis how to use these technologies more effectively and more efficiently. And as workers and as consumers, I think that's going to happen. The other thing that I'm hoping will happen also is that we can move our elections online. As you know, all of the primaries this week have been canceled here in the United States, except for Wisconsin. And there are already people who are asking whether the November presidential election will be possible under normal conditions. So I think also in terms of how citizens interact with the government, including elections, is something that will change as a result of this crisis. Ed?
Do you see an increased appetite maybe in artificial intelligence in this process as well once we recover?
Yes, so this is a great question. And so we see, or I see many potential applications of robotics with AI, of course, incorporated. Think, for example, about autonomous vehicles. These days, people are fearful about getting into an Uber because maybe the driver has the virus. Well, with autonomous vehicles, we don't have that problem. Also for testing people, see if they have the virus. We could use a robot in terms of healthcare personnel. As you know, we're exposing the healthcare personnel to the virus when we use them to test people on a massive scale. I think more broadly, artificial intelligence and big data, machine learning, is coming very, very handy during this crisis because we have tons of data, for example, about cell phone usage. And we're using those data to track compliance with social distancing and with sheltering in place. We're also using big data to develop a vaccine and to develop treatments. There are all of these stories in the press, and I'm happy to send you more later that indicate that a lot of companies and governments are increasingly using big data to cope with the pandemic itself. Ed?
Mauro, India is an interesting country. Do you feel that emerging economies like India would recover at a faster rate than a country like US or China?
Well, India is again, a different kind of economy. India is a market economy, but it's a market economy that is still quite protected from outside competition. And it's a market economy in which there are many large state-owned companies. What I think is critical to understand in India is to what extent and how quickly consumer demand is going to increase. Because India is a country that exports much less than China as a percentage of GDP. So in India, in terms of the shape of the recovery after this crisis, I think the single most important factor is how quickly will consumer demand recover. And for that, of course, we need to wait another 2 weeks to see whether the containment measures, very strict containment measures that the government has imposed, are actually working or not. Ed?
So the service industry has been hit harder than the goods industry, but from a recovery standpoint, do you think the goods industry will take longer to recover due to the supply chains that are in place currently?
Well, the service sector of the economy is very heterogeneous. Some parts of the service sector are up and running, like streaming services, to a certain extent education, financial services. Other parts of the service economy that require face-to-face interaction between the company and the customer, like stores, retail, tourism, all of these things, of course, have been heavily affected. Unfortunately, that's a very important component of GDP, especially here in the United States or in Europe and in Japan, in the most advanced countries. Manufacturing was first, if you remember, affected in the form of broken supply chains. So manufacturers couldn't get parts and components. And then the next problem has been some workers getting sick, and then lastly, the quarantines. So in some countries, non-essential manufacturing has stopped, and in other countries, or in most countries in the world, we have selective measures in terms of manufacturing. The other problem, of course, is that big companies in manufacturing, like automobile assemblers, have stopped making cars because of the plunge in the demand for automobiles. During crisis, people just postpone replacing their car or buying a new one. So I think we need to dig deeper than just the difference between services and manufacturing. Each industry is different. Within services, some industries are booming. Within manufacturing, also some industries are booming because they need to continue producing certain types of goods at an even higher rate. So it depends on the specifics of the industry and how the demand for its products is being affected, and also whether governments have designated those industries essential or non-essential. Ed, I think we have time for maybe one more question.
Mauro, how do you see the unemployment, how that's becoming very high? How do you see that affecting the overall recovery?
Well, unemployment is, as you know, a lagging indicator. So the problem with it, of course, moving forward, is that the economy hopefully soon will start growing again, but unemployment is going to lag behind. But right now, the crisis with unemployment is very severe in most countries around the world. Governments are reporting record figures in terms of new claims for unemployment benefits. And that's why it's so important that in these economic stimulus packages that governments are passing, that you have provisions for increasing funding for unemployment so that more workers can take advantage of it, and they can take advantage of it for a longer period of time because they may need it. The situation on the ground is very different. Here in the United States, we have now relatively high unemployment due to the virus. But look at Southern Europe. It was still high because those economies had not yet recovered fully from the previous crisis. So now they are sky high. So the situation is very different in different parts of the world. But then if you think about emerging markets, especially in Latin America, and bottom of the pyramid markets, especially in Africa, keep also in mind that large parts of the economy are what we call informal, meaning that those workers are working, but there's no registry that they're really working, and now there's no record that they're losing their jobs. And I feel for those people in that situation, it's going to be very hard for them. And that's why, again, we need to take two steps very quickly. The first step is stop the virus from spreading, and the second is to stop reopening the economy in a gradual way, but we can only take the second step if we are successful with the first step. Maybe we have time for a very, very quick answer to another question, Ed.
Just long-lasting economic impacts. In your mind, what do you see as some of the major ones that we're going to still see long-term going forward?
So I've mentioned already a few. Increased government debt around the world. We're going to see, I think, a shift towards digital across the board, customers and workers alike, and companies, of course. I think we're going to see a reconfiguration of global supply chains, probably some temptations about protectionism. We're going to see that companies are going to hold more inventory, and that governments are going to be more cautious about planning ahead of time for events such as this. So a lot of long-term implications, but once again, we need to worry about the long term, but we will never get there unless now we bring the pandemic under control first, and then second, we restart the economy in a gradual way. And once again, I think the timeline, at least here in the United States, should be to restart selective parts of the economy again, maybe in 3 or 4 or 5 weeks from now. So just let me just, in conclusion here, say that we're in this kind of trouble because the global system and the global economy have become so much more integrated and tightly coupled than in the past, that epidemics and pandemics occur more frequently than most people assume, and that we should be doing a lot of planning for global pandemics because most likely in the next 30 or 40 years, we will get into another one. The same way that, let's say, San Francisco will get another big earthquake within the next 30 or 40 years. In order to be ready, we need to develop skills, protocols, and systems with dealing with the crisis. And it's, of course, very important while we're still in the crisis for companies on all sorts of organizations to plan for the recovery. So thank you so much for listening. And we will share all of these PowerPoints with you. So now back to Michael Malefakis.
Thank you, Mauro. This was wonderful. And thank you, all of you who were able to attend from 6 continents. It was wonderful to see the chat of so many of you who knew each other from other exec ed courses here at Wharton, and to see one of Wharton's very best professors, Mauro Guillen, help us make sense of the amazing changes that are happening right now. I would like to say that if any of you are interested in learning more with Mauro or other thought leaders at Wharton, please do contact us. We'd be happy to talk to you about deeper dives into this. And next week, please join us at the same time. So 1400 GMT or 10 a.m. on Tuesday, the 14th of April, our Dean, Jeff Garrett, will be leading a session, a full-hour session, just like Mauro, on leading in uncertainty. And many of you have seen Dean Garrett. He is fantastic, just as Professor Guillen. And we hope to keep a steady stream of thought leadership from Wharton professors out to you to give access during these troubling times. But we are going to reset. We are going to make it through this and help think through what we can do to make us stronger as individuals, organizations, and as nations. So again, thank you from all of us at Wharton. It was a pleasure.